Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How we doing out there? It's our new set. Working on it, still putting it together. Happy to be in a new place here. Appreciate you guys watching us today. I find it fascinating, all the things you can watch and people stream. I was watching a guy, surprisingly, for like 10 minutes. As a truck driver. It's a, simulator game, but he had like the big handle and he was driving around just talking to people and stuff. I'm like, what am I doing? I was just watching for like 10 minutes. Now Facebook thinks that's all I want to watch, so I keep getting that out there. But I do appreciate you being here. We are financial advisors. We do things a little bit differently. We're the oddballs of Goldman Sachs. That's our custodian. That's who we use. But we don't do the suit and ties. We're just going a different route, working with the average person. So all of the support that you would get from a firm like Goldman Sachs and everything, of course, you get through us, but you don't have to be like a freaking millionaire to enjoy that. And one of the things that we're going to cover in our wine and wealth class that I do every week for clients, might actually try to do it over there, new set, is how the wealthy actually use their accounts and which accounts they use. They can't put money into a Roth IRA, so what are they doing out there? And if the back door goes away, then what do they do? What's the best tax advantage? So I'm going to show you all the geeky details on that and maybe explain some things that I might have taken for granted in the past that people don't know about. So we're going to go through that for you. As far as the stock market goes here today, you eked out a little bit of gains there. How's everybody doing over there? Robert, hey man, how we doing? Echo, this should be gone now. I pressed the wrong button there. We eked out some gains. If you take a look over here at the charts, Republicans come out and say, we're going to find a way to work together on this debt ceiling thing. We're just going to push it out a little bit longer, give you a short-term extension. It delays the inevitable. It does not solve any problems. That's the second thing now that they've basically said, we can't come to an agreement now. Let's just kick the can down the road. A little frustrating there, but nonetheless, maybe progress. I don't know. What do we call that? Progress. Typical government as usual. But so that helped the stock market. We actually started off the day quite weak. Overnight, stock market was selling off about 11 o'clock or so. We started really selling off, getting down about 20 points on the S&P. NASDAQ sold off as well. And then today we get news of that sort of the Republicans helping out a little bit, if you call it that. And we got a rally in the market. Not only that, you got the 10-year actually started to recover as well. Earlier this morning was sold off. 10-year was rising. We hit a new high, actually, 157-ish, somewhere in there. We get the debt ceiling news. That starts to recover. Totally changed the whole entire day. So in other words, if I were to prepare this show at like noon every day, I'd have had to change everything for the rest of the day because everything changed. Complete reversal there. Let's start with the NASDAQ here. That was your leader today. It's up 15% roughly year to date there. Still about 6% from this high to this low. So you got a little bit of a pullback there over the last 1 month there. A couple stocks that stick out to you if you're looking, and I try to pick some things that maybe I've seen you guys post in the chats there. Marvell, sharp move back up to highs there. They raised their growth forecast. They were thinking 15% growth. Now they're thinking somewhere around 15 to 20% growth at a conference. They happen to actually mention that one. You got a lot of dip. No, it's over here. That's the button you want to hear. And the word is not dip, man. Come on. I'll get it together. Dip buying in Pinduoduo, Chinese names, the COVID names, a lot of stuff that had been selling off, right? Pinduoduo is an obvious one. It's been selling off. DocuSign also been pulling back. Good bounce off the 200-day moving average. There's been a lot of that. Okada, also one that's been one that just sold off. Anything that has recently sold off, maybe a touch more than the stock market in general, got a little bit of a bounce today. You're really, really weak links. That's a good sign, actually, if you want to see a broad market rally. Because if you're picking on the weak stuff and the strong stuff actually got a little bit of a lift, that's a pretty good sign. Pepsi hitting the 50-day moving average, moving higher. Following earnings here yesterday, good earnings. I talked about it yesterday. They got a handful of upgrades here today, and they've decided to essentially retire about $4 billion in debt. They're going to be coming to their debt holders and just actually asking to pay them out and get out of the way there. So that's that case. Semiconductors still, you had a little rally, but still just a touch weak in the short term. Nothing impressive here just yet. I noticed that you got Micron down on the day by about 0.8%. And Lam Research refusing to budge as well. So I'd say the semiconductors leave a little bit more to be desired there. And you're right, been bringing up the Goldman Sachs thing a little bit. I'm proud of that, right? That's a weird thing because no other advisor you're ever going to see is saying that. And so I think that's awesome. And now they're getting their ducks in a row and they're starting to actually rebrand things and make it more obvious because Maybe you thought I was lying before, but now it's proof. You log into your account, that's what you see. So we've got the S&P about 16% higher year to date there. All growth stocks. The growth stocks led the way here today. Rally in bonds, that helped the growth stocks. Like I said, we initially saw, rally in bonds, decline in rates. We initially saw that rate spike, and then all of a sudden it started to sell off a little bit there. That gives you a little room for Microsoft to give you a rally today, 1.5%. Amazon, some of these FANG stocks that we've talked about that have been a little bit weak. I covered that yesterday. A little bit of a rally there. Alphabet up a third, 1% today. And how'd Netflix do? Look at that thing, man. Netflix is a freaking beast, just taking off there. A couple technical patterns I'll point out. You got ICE, Intercontinental Exchange, breaking out. I thought that was interesting there. I know someone had Mondelez, type it right, man, potentially breaking out of the downtrend, oversold downtrend there. This is the one that I had a small trade on it. Got out yesterday, so that one I only ended up with one contract, so just closed that one out. That one's kind of interesting, continues to recover. Con Edison, interesting pattern here. How many of you all know what the red bar reversal, or red bar ignored is? Taking you back to Japanese candlesticks days. In our candlesticks class, actually, that's available for all clients and research members, we cover the red bar ignored. That's exactly what you see today. Really strong technical pattern. If you like that stuff, what you're looking for is a really strong above average positive day, just like you had. I'll zoom in right there. Then you get a little tiny red bar that stays in the upper third with lower volume throughout the day. The very next day, the same replicating the move on the left side there. You've got obviously a solid above average day, tiny little red bar staying in the upper third of the last day's range. Then all of a sudden you get that big move. That's called a red bar ignored, and typically that points to more momentum there. So if you're looking at that, that's cool. What does this tell you though? You're in the utility space. Utilities were actually the leading sector today. Why is that? Rates took a break, and it was a sharp reversal. You can see even utility stocks started the day lower as rates peaked up to highs, and then we got the news from Congress there, and they said, oh, rates are going lower again. Here we go. You got a little blast off to highs. Oh, Mama Jazz knows what the RBI is. Been a while since we've talked about that one. Anyways, just wanted to point that one out to you. That's what you have there. A couple other things. EA Sports, I don't actually know why it was down on the day. I was looking around. That's a pretty big move, 7% down on the day. I don't know. I have nothing to offer there. Just got pummeled for really no apparent reason. You got Moderna also selling off a little bit lower. Looks like that one's got a little bit more to the downside. Denmark pauses the vaccines, and for people under age 18, Sweden says if you're under the age of 30, we're going to go ahead and put a pause on the Moderna vaccine. We're going to focus on the other Pfizer and BioNTech as well. And so that hurt the stock today. And CDW gets a fairly obvious downgrade from Morgan Stanley, down about 5% on the day. Hardware has underperformed the stock market for like the last 4 months, and I'm talking like double digits. So if you're looking at the hardware stocks, they've been nothing impressive. That's also the case with CDW there. They said they're going to have those issues going forward, and basically they say it's a hold, but they don't think it's an opportunity to buy it. I would think in the short term you like that pullback. Do people like these kind of pullbacks here? Yeah, a little oversold. Maybe that's the case. Anyways, you got the Dow here still in last place year to date, but it's catching up to the Russell actually, and the Dow just barely made a new low, so I think that's a touch stronger for Dow stocks overall. McDonald's is just the only one I want to point out today. McDonald's almost to new highs, slow and steady. Right? That's a pretty consistent move there, almost under the radar-ish, like who's looking at McDonald's right now. But nonetheless, that's pretty much the only stock I want to cover there. Caterpillar was a weak stock, one of the big leaders to the downside today, but it actually finished kind of flat, so not a big deal there, I guess. Anyways, if you're playing Guess the Dow, that's a game that we have going on here where you can win $100 if you'd like. Cody, give us an update.
Your top five are Ma, Eric, Corey, Marty, and Donald. That's it.
It's a hell of an upgrade. There you go, or update. Play Guess the Dow. We announce the winners on Mondays, actually, because Fridays we're not here. And so if you win, you just have to be the closest without going over on Friday as of the close there. Now, you can put your guess in for next week if you still want to play along there. And, yeah, no strings attached. You're welcome to play with us. You think the economy's recovering? What do you guys think? The economy is in this period of recovery, and there's a number of different ways to see that. I'm trying to point out different things to see if maybe that's interesting to you, or if you can catch anything from it. And one of the things I'm going to share is the ISM numbers here. They look like a whole hot mess here, but just give it a second, I'll share this with you. What we want to see when we're looking at the ISM numbers as they come out, manufacturing numbers, they actually came out yesterday, but I just thought I'd put this together for you. We want to see wholesale inventories, right? Which would be, in this case, the green line. You actually want to see those ticking higher, and you want to see backlogs ticking higher. What you want is the retail side of inventories to be moving lower. That is your picture of a recovering and fairly strong economy overall. A good example for this, you go back to like 2004, you had the same thing. Coming out of the recession from the dot-com burst, you had backlogs and wholesale inventories rising and retail inventories dropping. That's a good sign. The market actually correlates with that perfectly too, or almost perfectly. You could also look outside of 2010 as well, and then in 2018. We have the same thing happening here, and we have retail inventories moving lower. 2018, you got the same case. That's a sign of a strong and recovering economy if you're going to use fundamental data or some of this econ data to take a look at that. What's interesting about this one, if you look at this recovery in this fashion compared to everything else, this is a massive recovery, right? It will not sustain itself there. This is the highest, fastest recovery as far as this econ data is concerned. So the question is, how much do you think that can continue? How much further do you think inventories can actually fall in a retail space? I would argue, coming into Christmas, obviously there's a big issue there. I posted something that a client sent to me on my personal Facebook page there, but this is just to try to highlight we have low inventories in the stores. We have high backlogs of manufacturers trying to put together products so that they can put inventory back in the stores. And although that would seem sort of scary that that's the case, that's actually a sign of a good recovering economy. You can look at the stock market as a whole to see good performance during those times, and of course, good performance during this time as well. Another thing we can look at just real quick is the movement of people. Did you know that your cell phone tracks you? Usually I show Android. This time I'm going to show Apple. Take a look. Here is, Apple publishes this data. It's totally free. You can have it. General movement of people as far as transit, transportation, driving, walking, or riding buses there. And what we did, we took every single day. That's in the background there. And then we actually plotted just a 7-day moving average, just so you get a feel for the actual trend. What you have here is January, when we knew nothing really about the virus. Everything is good. We're all doing our thing. All of a sudden, transportation drops by 50%. Right? This is the whole virus right in here. We more than fully recovered there. Had a little bit of a downturn here going to September, October, end of the last year into January. We've since recovered and now are trending back above those highs as well. This is good, but it's just a touch higher than where we were prior to the whole virus issue there. So a roaring return of people transporting themselves, their phones going to work and such, not quite there. Now, the stock market follows transportation actually quite a bit. You wouldn't think that, but this you could actually see on the market here. Let me give a second to just come over here. We're going to go to the S&P. Check this out. So I'm going to change the time frame. We need to go back 2 years. There you go. Okay. So here's January, going into the year there. All of a sudden, you have the virus drop, of course, the economy. That's an obvious one there. But look what happens when you go into September. All of a sudden, transportation slows down. People are not moving around as much. You get market volatility there. Isn't that kind of cool? I think that's pretty cool. So you have that going on with people using Apple Maps. You also have that going on with Android as well. I just chose to show Apple today, where we now have a flatlining of people that are supposed to be going back to work and be at work and go traveling and doing all that. It is flatlining, which could very well mean we're in the midst of this again, which just could be a couple months of back and forth, right? Doesn't mean it's the end of the market, doesn't mean it's the end of the rally, the world's going to end and all that great stuff. It's just that the last time we all slowed down our movements, the market slowed down as well, and that's already happening. So kind of a cool thing to take a look at. Sector-wise, not a whole lot to take a look at here today. Utilities are going to be your leader. Anything interest rate sensitive today did well because of the rally back in rate, or the decline in rates. Real estate, you can see, started off lower on the day, all of a sudden ends up higher. You also got your tech stocks. Anything tech-related, large cap tech and large cap growth stocks did well. They were up there in the top 5 as well. And energy took a break. A much needed break there. If you look at the price of oil today, it pulled back as well. Go over to the price of oil. You darn near hit, nope, you almost hit $80 a barrel, the price of oil. Didn't quite get there, actually. So a much needed break, hopefully more of a break to come. But I'll continue to say, what's the reason? Why would oil be lower? You have no reason for oil to be significantly lower from here. That's that. Not much in the way of new highs, new lows here today. I got one new high. That's Live Nation. And honestly, I think that has to do with the New Kids on the Block coming back, doing a little tour. Do you know New Kids on the Block?
I don't know.
You don't know New?
What? I've heard of them. I couldn't tell you a single song that they sing.
It's the one where they put their leg between he jumps over his leg. Mark Wahlberg, or the Wahlbergs. He was in New Kids on the Block. Well, he's a buff movie guy, so I figured you'd know something about that, huh? Anyways, New Kids on the Block. That's not the reason why, but if you look at Live Nation there, that's what you have. Moving to new highs, people getting back out there, lots of festivals going on. And I tell you a fun way to track that, going down the weird, odd hedge fund way of thinking of things. If you want to know if Live Nation or some of these companies that revolve around festivals and events are going to do well, you don't actually track the company, you track the musicians that are practicing ahead of these tours, like Katy Perry musicians. So actually follow all of them on Instagram, and you can see them in the studio, getting ready, playing familiar songs, trying out different things, testing lighting and stuff. So all these musicians that were sitting in their apartment playing and practicing are now back on the stages practicing, getting ready for the big run, if they're not already out there. So kind of a cool way to look at it. All right, 10 new lows on the day. I want to point out oversold here on McCormick, MKC, your spices and whatnot. You know what they are. Oversold bounce here today just a little bit. I want to point out Amgen hitting new lows and not reversing, so the weakness continuing there. Colgate hitting new lows and reversing, up 1%, playing in the defensive space there. Maybe an oversold bounce and like a 2.5% yield, so not too bad there. If you're looking for weak stuff. And then Newmont hit new lows as well, but recovered quite sharply there as rates began to sell off just a little bit throughout the day. As far as stocks in the news, I can't think of I'm singing a Backstreet Boys song in my head. I'm trying to think of the New Kids on the Block one. I never really listened to them, but they're one song. They have their one song. AutoZone hitting, or in the news today, they're going to buy back $1.5 billion of stock. Remember we said the other day, you're going to see more of this because Congress is apparently going to vote on penalizing these people for buying back stock. So why not spend your money now? It means no raising of the dividends if you're looking for a stock and hoping that it raises its dividend. Hovnanian Homes, this is a home builder. They lowered their guidance, supply chain issues, labor costs, inventory, selective inventory that they've chosen not to build on. So it's really a matter of time for some of these home builders. We covered that months ago. Facebook, a little recovery here today. Mark Zuckerberg says this whistleblower thing, we don't understand this whistleblower thing. And if you look into it a little bit, the whistleblower is using the same attorneys that the whistleblower that started the impeachment process of the prior president, they're using the same attorneys. Why would that be the case? And this person, the lady that testified in front of Congress, she's also using the same PR firm that Jen Psaki worked for, the current press secretary. What's the need for that, right? Seems a little bit odd, and Mark Zuckerberg agrees. He's like, I'm not sure I get what's going on here. This doesn't make any sense. But she's out there, she's talking, and she's a whistleblower. But I think that's far from the case. Something strategic is happening there. We just don't know what it is. Not to be that guy. You got Constellation Brands here. If you like your liquor, you weren't shopping there. So Constellation Brands, weaker than expected earnings. They did raise guidance going forward. Taxes are the issue. Bourbons have issues with taxes. All spirits in general always are high tax items, but it's likely going to get a little bit worse in this new proposal from Congress. So that's not good for them. And Snapchat says that their usage increased over 20% when Facebook went down 2 days ago, which I don't know. That maybe they sold a few more ads. Maybe that translates to them. Maybe we're able to share a few more ads, but that's what you have there. And over the pond, French leaders say that they are a millimeter, whatever that is, away from getting the 15% global tax instated. They're right there. All the participating countries, they're basically on board with that, almost ready to pull the trigger on that one, which is kind of crazy. I mean, that's another way that it's just going to cost you more money, even if you don't agree with where they how corporations handle their corporate taxes. All right, we will take your questions if I can, and see what we can do here. As far as that goes, Kirk is disappointed in the Republicans. How dare they? I don't really follow like the logistics of all that. All I know is now it's going to take longer for them to settle this whole thing. Like, let's just go. Come on, figure this out. Can we all talk about stuff that, like, you know, helps us grow, makes us a better country, a stronger economic country? Could we put some of those things in place? Notice none of that was in the in those proposals. Yeah. Hey, the correction's over. Are we still in the danger zone? Market going back to 50. Market going back to 50. I'm not sure what you mean by 50. I would personally. You have, here you go. So you have nothing to glean from this, right? You have Christmas tree trading in here driven by headlines, not driven by price or valuation. And that's temporary. That always happens. You have a little Congress event in here. It's moving the markets in the short term, people just positioning, but really has no impact on the grand scheme of things, in my opinion, just from being through all kinds of great things. Yep. Releasing some oil reserves, fuel price surge. That could be. It doesn't matter to me. I think how you get the price of oil back into the 60s, there's nothing we can do about it. I mean, I'm kind of fascinated by that stuff. So just studying all the inventories, everything around the world, what OPEC plans on doing, there's no way to make that happen at the moment. I hope I'm wrong. Yeah. The attorney's got a hold of her. I don't know. I just something's a little off about that. You know what I mean? Because it's not really that big of a deal what she's talking about. It's like we kind of all know that. I mean, what's the difference? You got DraftKings. So you're saying you have some calls now, is what you're saying. You got some 55. You sold 50. Nah, you probably didn't sell the $55 calls, did you? I don't think that's the case. No, not for $6. Help me out with that one a little bit. Oh, coming back to the 50. Oh, bouncing back to the 50. That'd be fine with me. If we bounce back to the 50 and see that same kind of rejection again, think about it. You knock your head up against the wall, it's not too bad. Knock your head up against the wall. At some point, you start people believing that that's going to be now resistance instead of support. I would greatly appreciate that. You want to hold some AMAT to the bottom of the range? Depends on, yeah, I mean, I'm with you. I like the idea of holding it there. If you're an options player, I mean, you could certainly try to reduce your costs a little bit and play some games there. Actually, yeah, you could do that. AMAT, yeah. I usually don't think of this as one where there's any available options trades, but that was because I'm old enough to remember when this thing was a $20 stock. Yeah. You got your start on Beyond Meats today. It's kind of been out of the headlines, though. It's kind of an odd name to pick, you know? Not really any news driving around them, not really any change in earnings, projected earnings, or anything going on. So you would be looking for like a news event or something? You think of something on the horizon maybe coming up? If you're not, I mean, to me, that's a dangerous one, trying to catch the slip there and catch a little bounce. I'd be more of what you call a scalper. Quick to take like half of it off the table, make a little profit, and then see what happens to the rest of it or something. Well, or to say it in the terms of Wall Street, I wouldn't be overweight. Huh? Yeah. I don't know. Oh, Robert says it. You're going to at least get a desk. Am I going to have to knock before I go into Cody's office? How quickly you guys bail on me. I get it that I'm just like the government and waiting till the last minute here, but I've got some time, people. Yeah. All right, I'll get out of your way here today. I appreciate you hanging out and chatting with me. As always, you enjoy the rest of your day, and we'll talk to you tomorrow.